Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum where all voices matter. Fintech, or financial technology, is now a sweeping term that describes innovation in the delivery of financial services. Banking, investing, and cryptocurrency are examples. And Fintech promises to change the way we earn, shop, and create wealth. My panel today is perfect to delve into this more. We have Dr. Dan Rosen, who is the co-founder and CEO of Digit in Toronto. Mark Morissette is co-founder and CEO of Foxquilt Insurance Services of Toronto. And Ray Sharma returns as our guest. He is, of course, co-founder of Extreme Venture Partners in Toronto. Welcome to all of you.
Thank you.
Maybe start with you, Dan. I just want to sort of go around the circle a little bit and inform our viewers a little bit about you and what you do. So, Dan, tell us a little bit about your company.
So thanks a lot for having me, Tony. I'm the CEO of Digit, and Digit, we think about it as the first enterprise wealth management platform. We're powered by institutional-grade analytics and risk management tools that we think were only available before to top investment banks and hedge funds. And our goal is really to focus on enabling financial advisory firms to elevate the quality of the advice they provide, and also demonstrate that value to their clients. A big part of what we think is we try to empower advisory firms to scale up. We'd like to talk about the high value human services they provide with really, really good and powerful technology.
Very good. And Mark Morissette, please tell us about Foxquilt.
Yeah, thanks again for having me as well, Tony. I'm the founder and CEO of Foxquilt, and Foxquilt's an insurance technology company that empowers small business owners to have access digitally to a bespoke, modular, full insurance right policy and new solutions that they can access 24/7 digitally. And within our insurance technology that we built a fairly dynamic underwriting platform that enables lots of different data science and power different algorithms to fire rate and obviously build that modular product offering around each small business, unique to each small business.
Very good. And Ray Sharma, who's returning to our show, of course, tell us what you're up to these days.
Hey, Tony, good to see you. I'm just doing the same old venture capital thing, seed stage, early stage investing, and predominantly in the city of Toronto.
Thank you for that. Ray, I'm going to start with you. Just tell us what you think the future of fintech is. What are the trends, and perhaps give us a sense of how COVID has affected that.
A few years ago, I wrote an op-ed piece in the Globe and Mail, which looked at the amount of investment going into the Canadian markets in fintech and comparing it to other major markets like Australia and the United States. We often see a 10-to-1 ratio of the Canadian economy to the U.S. economy, but in this one case, we were dramatically underinvesting on a per capita, on a per person, per economic unit basis, every metric. And it was concerning because, the Canadian economy did really well in the 2008-2009 crisis. And we were really set up as leaders globally from a risk point of view. Dan can talk to that. But, in terms of fintech investment, we've seemed to have underinvested. There was a point in time actually in the United States not too long ago where 25% of the $100 billion in venture capital that went out there went into fintech companies. So we have some catching up to do, Tony.
And has COVID helped or hurt the situation, Ray?
The COVID situation has really helped, open consumer minds to new business models that they were maybe not as open-minded to before. We did a consumer survey of several hundred Canadians to see what their interest levels would be in adopting a fintech institution versus a bank. And what we found is that the demographics of the respondents, if the younger they were, the more likely they were to be open to another institution. When you do that exact same survey in another place, like in Africa, for example, you'll see that there's a much, much higher level of interest and willingness to switch to these new solutions.
We're going to continue our conversation after the break. We're going to talk about financial technology with our all-star panel here, and I'm sure it'll be an enlightening discussion. So please stay with us. We'll be right back after this break. I'm going to keep going with the same question that I asked just before the break about the future of fintech, impacts of COVID, and Ray kind of set it up perfectly for Dr. Dan Rosen to talk a little bit about risk assessment. Dan, what's your sort of what's your view of the situation?
Look, I think that so first of all, fintech is here to stay, and as you mentioned, right now, basically everything to do with big data and analytics and AI, and all the digital technologies are already changing the way we view financial services and even the way we view money. And that is something I think quite important and substantial. Having said that, it's not something new. I've been building risk and portfolio management systems for 25 years, largely for financial institutions. But I think that those are the early stages for fintech. And in particular, what's probably well kept a secret is that Canada, and particularly Toronto, has been a phenomenal ecosystem for that over all this time, and I think it continues to be changing all the time. The only additional point that I'd like to add, as we talk about the future, we talk a lot about fintech, how it's changing, basically automating everything, maybe getting things like robo-advisors that are going to get rid of people in finance, etc. And I have a slightly different view on this. I think we will coexist with these machines for the future to come. And if anything, the future is really not in eliminating or thinking how to just automate things, but how to empower all these financial practitioners to do that. In particular, and I'll make the last point on that, we work now with financial advisors. Financial advisors are going to be there forever, in my view, because it's a needed professional that will help families engage with money better and do better planning. So all these financial technologies will help them really do this better, and also educate their clients and the markets in general.
I'm glad you made that point, because it's not a zero-sum game where you make some advancement in AI, for instance, and that means that everybody in financial planning is out of a job. There's still a role to play, and there's still a need for informed advisors. So thank you for making that point. Mark Morissette, from your point of view as an insurance services company, can you weigh in on this issue as well?
I mean, I agree. I mean, first and foremost, it does start with basically using technology to emancipate your customer, your small business owner in our case. There's always going to be, as we work together with any legacy value chain of agents and brokers, there's always going to be a need of an omni-channel present to service those different interests and needs. And it's about incumbent carriers recognizing that and obviously moving their business models upstream toward that mid-market customer. And where we play an integral, have an integral position in empowering the customer, is the sense that there's this misconception in our marketplace that small businesses can access insurance immediately overnight and right size their operation with their risk mitigation needs. In the case of a pandemic, downward and upward as they scale and grow. So we play an important role in the sense that we're building technology and automation so that they can have more power in dictating terms within that treaty, that they can access it 24/7. And as they grow and scale, then they can build that modular product around the needs of their business. And so Canada is an amazing ecosystem, rich with data science and data scientists, engineers, marketers that can build these prolific fintech trading platforms. We're world recognized. It's about basically working with the greater value chain, incumbent carriers and others, to take those strides forward so that we're leading the world in innovation.
I think that's a good point, and we're going to return to that a little bit later in the broadcast. Ray, we've got under a minute left. It doesn't do justice to it. We might have to take this over the break, but I did want to talk about crypto and what's happening with various platforms. Can you give us your assessment of the latest on crypto?
1 minute or less. Okay,
Well,
I'll try.
no, we'll go after the break too. Don't worry.
Well, we can separate them into sort of what's happening with the Bitcoin and, you know, replacement of traditional currency with e-currencies all over the world, like we saw recently with the government of China announcing, and then the rest of the market, the tokenized market, Ethereum and all these programmable currencies, if you will. They're slightly different. One, the Bitcoin has a niche. If you want certainty of transaction and anonymity, there's a value to that. There's clearly, a lot of enthusiasm, but I see that as like sort of a, the value of transactions that you want to have those two essential features.
And we're back here at Boom and Bust. I'm your host, Tony Clement, with our FinTech panel. Ray Sharma, we just got going on the issue of crypto and tokens. Please continue with your thoughts. It's very interesting.
Thank you, Tony. So the Bitcoin and the e-money is one aspect. One is anonymous and one will be trackable by the central banks. The whole evolution of tokens, the NFTs, and a lot of these really interesting alternative coins is based on the following, which is we've now seen the new dimension of utility introduced to these tokens. What that means is it has a monetary value, but it'll have some other sort of service dynamic. That service dynamic can be storage, it can be processing power, it can be whatever it is that you can dream of. And the beauty of that whole world is you can make those tokens, that whole phenomena programmable. So you can now have money and things that are financially related that are programmatically integrated into the financial systems, and it allows for a whole new generation of potential applications. So, very different. Bitcoin is in its own little bubble, if you will.
Right. Just one thought on tokens, because the latest to gain some sort of media presence was Tom Brady and his team that are going to tokenize autographs. So, is there any limit to this? I mean, and who gets to decide what the value of all this is? Right?
Well, there really is no limit. Any asset on planet Earth can be tokenized. Anything can. Any asset or service, if there's no restriction. And in terms of the answer to your question about price discovery, it's a good question, because right now, we have to be careful about people getting taken advantage of. And, that's when the regulators step in. It's going to be a tough one. Very tough to regulate.
And as usual, Boom and Bust does not offer investment advice, so I want to make that point clear as well. Dan, Mark, any thoughts on our conversation on this? Dan?
Well, look, for me being a math and computer science geek, I just find the whole thing that we're living fascinating, right? Where suddenly money is truly a computer science object with a deep level of sophistication. But what I find very interesting is I think it's very hard to predict where this will go, because we're just starting.
Yeah.
Like Bitcoin was the first one that put all of these things together and truly made it available. But it's probably not the right technology in the long term. It's not the most advanced one.
Yeah.
It's the most expensive one. Computationally, it's inefficient. It's slow. But in the last 10 years, after Bitcoin has come out, there's some great advances in various methodologies, new currencies. There's labs all over the place doing it. So I'm pretty excited to see where this ends up. But I think it's going to be, so it's here to stay for sure. The question is which technology and how it all will fit, and how will the governments get comfortable doing this in an efficient way. And Ray raised one quick point, which is how do you protect all the retail investors and all of us who will use it.
Yeah.
And but I find it just fascinating, because the way our kids and grandchildren will think of money will be completely different than we did.
Now, Mark Morissette, although you've been prepping to weigh in on this, I'm going to ask you a separate question, if you don't mind. And just bringing it back to something that people can relate to. What's it like building your company in Canada? What are some of the challenges and opportunities?
Oh, wow. It's, you know what, like Dan, I've been building these trading platforms, value props and product my entire career, spanning a couple decades, even pre-liquidity crisis with ING Direct. The biggest difference is for a distribution strategist like myself, 15 years ago, we didn't have the architecture nor the data science to basically trade our proposition across a myriad of different distribution channels. It was mostly done telephony and contact center. 15 years later, we finally have all the different microservice data-enabled architecture to engineer really interesting, innovative product, and then empower agnostic to distribution channel, whether it's SaaSing it out to white label alliances or straight to the consumer. That basement business that's an Etsy craft shop representing their own interests can access the same treaty price and value proposition as a large B2B program. So it's essentially exactly what when we use these cliches around democratizing the small business owner or the customer, and it's true. We have that ability to do that, and then it transcends borders because you're servicing a full cross-border solution. I always use the example: a locksmith in Erie, Pennsylvania, is a locksmith in Sudbury, Ontario.
And we're back here at Boom and Bust with our FinTech panel. I want to thank these gentlemen for making time on a very interesting topic. Mark Morissette, you are in the middle of your presentation on some of the challenges and advantages of being in Canada. Please continue with your thoughts.
Yeah, I mean, the challenges, they remain the same. So we have wonderful access to talent. That's always been there. That can align around a common purpose and mission. But we are always having to stay a little bit discreet and underground because we have to bootstrap a little bit longer and then measure 10 times, cut once, test and measure your thesis in the marketplace. Because if you give up that proprietary business model to your American brethren, they can go faster with capital. We remain a conservative culture when it comes to all things capital, and we have to be obviously a little bit more measured in the marketplace where we're trading that first product as MVP or otherwise. So I would say, as you grow and mature, then you can access, capital does not have borders. You can access that international capital as you grow and mature, but it's always tough for early stage companies that have to basically bootstrap and do it the good old fashioned hard way.
Dan Rosen, I'd love to get your point of view. What it's like to build your company in the Canadian context. What's your story?
Yeah, I'd like to. I fully agree with Mark, and I'd like to maybe stress a couple of points. So, first, I think that Canada, and particularly the Toronto GTA, has been a well-kept secret for great engineering talent, particularly the combination with finance, given our very healthy financial industry that we have here in Toronto. But like financial engineering, everything to do with artificial intelligence and machine learning, computer science analytics we live in one of the best areas in the world for that type of talent. And we've definitely been able to bootstrap on that several times. This is my third time around doing it. And it's been always great. And I think that's awesome. A second part is, of course, our proximity to the U.S. makes it easier for us to access the U.S. market, and culturally, we've always found it very easy to work, and also even access the European market. So I think Canada offers that additional nice part. Where I will start, where I will also agree with Mark, is the two areas that I find require a boost or definitely we might be a slight disadvantage is definitely capital. It's got a lot better though than it was 10 or 15 years ago, but capital, and particularly early capital and growth capital, has been lagging against our US neighbors for sure. But more importantly, and maybe I'll say something controversial, but I don't think it is, I think sales and marketing talent, for some reason, I've always find it, and I've talked to other entrepreneurs, we seem to, as strong as our engineering schools are and as strong as our engineering culture is in Canada, there's almost like sales is a bad word or something. We're so polite and maybe and etc. But definitely, I find that sales and marketing talent is a little bit more difficult to find in Canada, and I know many firms who end up doing it in the U.S. Because of that. But I don't see any real reason. I think there's something there that happened.
It may be a mystery. We've got about 30 seconds left. Ray Sharma, you referenced your article from several years ago about some of these issues and challenges. Anything you want to add to that?
The capital issue that we're facing, I think it can be addressed a little bit if the big financial institutions in our country step forward and start funding corporate venture capital funds. We've seen a few of them do so, like Power Corp has one, and other banks have kind of got into venture and gotten out, several times in the case of Royal Bank. So I think I would just like to end with one note, which is that, we've got an amazing financial industry that did so well in 2008, 2009. They've done really well, earning their strength off the back of Canadians. And I think one way they can give back and pay it forward is if they all set up corporate venture capital funds and look to companies like Digit and Foxquilt that are leading the way and helping support them so that they can go toe to toe with the really big companies that they end up competing with in the US and beyond.
Indeed. And I think we're going to leave it at that. I want to thank our first FinTech panel for being part of this program. It's been very interesting, and I certainly wish you well with your ventures. Very interesting FinTech panel. Our first won't be our last. I felt we just scratched the surface, but you can see a lot of dynamism and a lot of change there. Stay with us.